Thanks for tuning into Talking Point. I'm your host, Niraj Shah. And the big question that we have for you today, or that we have for our guest today, is this. For some time now, the question mark has been that between consumption and capex, should there be a change in your investment decision, considering that there is a perceptible change or perceived change in where finances might flow into? So what to choose between consumption versus capex? And I think that's the question that we asked to somebody who runs a very successful fund management scheme, but is also very deeply entrenched in one of the two aspects for sure, which is consumption. But of course, Milind Karmarkar looks at all markets, has views on capex too. So it's a pleasure and absolute delight to have him. He's director and fund manager at Dalal Broacha, joins us right now. Milind, great having you. Thanks for taking the time out. The smiling assassin, as I call you, Milind, though you're hardly an assassin. But Milind, coming on this question, really, I would have suspected that given a choice, your portfolios would be heavily skewed towards consumption. And I know in the past you've told me that even banking forms a part of consumption, some other sectors form a part of consumption. I'm trying to understand, did the portfolio have a larger share of capex exposure in the recent past, and is it changing now or not really?
So yes, what you're saying is right. We do have an increasing portion of capex also in our portfolio. Though consumption remains the major portion, roughly about anywhere between 15 to 22% is now focused on capex.
Okay, and
industrials, as I call it.
Industrial, and that hasn't gone down post the election, post the budget. It stayed steady.
It has stayed steady. In fact, a little bit over the 6 months, it's moved up. There is no change post budget.
There's no change post-budget. Okay. Do scares like what's happened on Monday, the follow-up on Tuesday, and sure, BOJ has come in today and sued and played some balm on frayed nerves. But do scares like that worry you? I know you've screened markets for a number of cycles. Or do you view this also as an opportunity?
So when it comes to these type of worries, actually this came out of the blue. Let me be very frank. But at the same time, just before the elections, we had created some cash. The idea was that if at all something goes wrong in the elections, then we would like to invest if the market comes down. Frankly, the market has not come down as much as we expected it to be. So market is down maybe 4-5%, nothing great. So, but at the same time, in our PMS scheme, when people had come in the last, say, 4-5 months, we are close to about 40% cash, or more than that slightly.
Sorry, did I hear 40% cash?
Yes, in the new accounts.
Okay, but is that still the case right now, and you're waiting for a further dip?
So we are investing as and when we see a particular stock falling, maybe because of lower than expected results. Like this quarter, I see most of the companies talking about, and many companies have shown lower than expected results, and the answers which they have given is because of the heat wave and because of elections, whatever it may be. But if there is an opportunity to buy something, we go ahead and buy it.
And I mean, are you seeing these opportunities crop up in the capex end of the sectors, or are you seeing this crop up in the consumption end of the spectrum?
Both ends.
Both ends. Okay. Now, Milind, the reason why I was very excited to talk to you today is because the capex theme, for example, and the ones which have got this moat, the MNC companies, etc., are all trading at very high valuations.
Correct.
Okay, let me finish this question, then I'll come to consumption. So, if you are indeed still exposed to the capex and the industrials theme, are you invested into those expensive MNC businesses which have got a moat and exposure to the new energies theme? Or are you invested in some other spectrum? Would love to understand what do you like within this capex exposure.
So within the capex cycle or within the industrials, we are invested in companies which are to do with power, where we see whether it's a transformer company or HVDC companies and things like that. There are MNCs, of course, in that. We are also invested in a large gas company, industrial gas company. So these are the two MNCs which we have. But we also have PSUs. So our focus is predominantly power and railways. Though not the classic railway names, we don't have them as of now. But we have PSUs which are connected to railways as well. So these are as far as the larger companies are concerned. In the smaller companies, we have an exposure to predominantly power and power ancillaries. So that is the focus.
Okay. Power equipment as well, because I mean, some of the power equipment companies,
Yes.
particularly the wind energy
Yes.
companies, the Suzlons, Inoxes of the world, have really rallied thick and fast. So
So
where is it?
yeah, please go ahead.
No, I was asking where within this power ancillary space?
So we are into meters, smart meters. So we are invested in smart meters. We are invested in Thermax, which is boilers as well as green energy. So these type of companies we are invested in.
Got it. Milind, here's a chart, and then I want to swap a little bit to consumption. But viewers, I just want to show this chart and the consumer sentiment index. And if you see this, the all Indian urban consumer sentiment relative to rural and relative to the combined has actually come off a little bit in the recent months versus what's happening in rural. And I think this is a very important change that has happened from all that we've seen in the recent past. Now, Milind, I would love to know this. Have you made a pivot in your consumption portfolio towards rural focus plays?
So let me just explain. So I was reading a book called Lilliput Land. Very interesting book if you are looking at consumption. So one of the chapters it talks about the Indian consumer and how many MNCs have got it wrong. So in India, if you divide consumption into 5 quintiles, the top 2 quintiles take the most of it, which is the rich and the upper middle class, you can say. The bottom 3, which range from a household income of roughly about $3,500 and below, frankly don't not 3,000, $2,500 and below, don't have anything left after their day-to-day needs. So that is the problem. And because of that, I think those companies which focus on the bottom 3 quintiles along with the top 2 will be the significant beneficiaries. Interestingly, it also says that 17% of the rich in India surprisingly stay in rural India. So I think this rural-urban divide, frankly, I am not looking at it that way. What I am looking at is which are those companies which can service people who have a $5,000 per capita income, as well as people who have $1,000 or a $2,000 per capita income.
Okay. And so therefore, would these be product companies? Would it be tech companies which show all kinds of products? How is this shaping up?
There will be retailing companies.
Okay, fair call. Well, okay, okay, Milind, here's the deal. I was looking at I was preparing for this interview. I was looking at some of the businesses, whether or not they are there in your portfolio is separate, but I'm using them as examples.
Okay.
A Trent, a Varun Beverages, a Zomato, and some others. They were trading at very expensive valuations even in January 2023.
Yes.
And in the subsequent 18 months, they have continued to trade at those expensive valuations. The stocks have given between 3x to 4x to 5x returns. So some of these stocks continue to stay expensive. I'm trying to understand, how do you wrap your head around that? And do you invest fresh money into some of these expensive businesses as well? Why or why not?
Okay. So let me take a classic example of Trent, and I have given this disclosure many times that I hold the stock, we hold it across all portfolios. And the reason for that is simple, that what I just now said, that it caters to all types of consumers. So whether it's a slightly higher end consumer, he can go to Zara, a middle income consumer can go to Westside, and you can lower than middle class or lower than middle class can go to Zudio. And they have an offering for each and every customer, even if he's getting dollars per capita or $1,500 per capita, there is something which he can buy in Zudio which costs maybe $2 or $3. So that is what it is. In the sense, if you convert it into rupees, it's 200 to say maybe 400 rupees when it comes to buying a T-shirt. So that is the kind of spread which they have. Looking at sorry, not Zudio, looking at Zomato. Zomato focuses predominantly on urban India as of now, and I think at least in the coming few years, it will continue to focus on urban India. We bought Zomato when it started making money, and we continue to hold. And the reason behind that is that besides the food delivery business, Blinkit probably has a huge opportunity, especially in urban India. I don't think that opportunity exists in the smaller towns or the grade A, grade 2 towns, but it definitely is an opportunity especially in a city like Bombay where people have less time. So that is the reason why they have continued to grow. So coming to price earning ratios or valuation, typically, Trent has been continuing to deliver a 40-45% return, and in all probability, it may deliver like this for a longer period of time because, frankly, it's as of now just a $1.5 billion company. And if you look at the other fashion brands, they're anywhere between 10 10 billion, 20 billion, the global fashion brands I'm talking about. So if you believe that India is going to have a sizable uptake in per capita income, I think these stocks could be interesting. Even the food grocery business, whether it's so there are many grocery businesses, whether it's Avenue, whether it's Star Bazaar, and whether it's Reliance. So these businesses also have humongous opportunity despite someone like a Blinkit or many others being in existence, because these people can go deep under where the population density is lower than Bombay, where Blinkit may not work, but these guys will do well. So that is the reason why I continue to believe that this particular segment of retail, whether it's fashion, but in fashion you need to get your pricing right, need to get your vendor base right, and of course you need to probably get your balance sheet also right. So if these three things are there, fashion will do well. As far as grocery is concerned, again the same thing. You should have a value proposition, and if you have a value proposition, I don't see any reason why these businesses cannot be long-term compounders.
Okay, so so Milind Karmarkar viewers believes in the long-term compounding story, and that's why it's not just the recency thing. I mean, I think some of the investments in consumption have been there for a while, and he's now reaping the benefits of that. One quick question, Milind, are you enthused by this whole conversation of rural spend move? I know you said that you don't look at rural versus urban, but the reason why some of the people are buying into staple companies is the belief that rural spend will move up and therefore their numbers could look slightly better over the next 12 months. Do you buy the argument?
So I have looked at rural companies earlier, but the issue is that focus only on rural doesn't work. Especially in FMCG, I think rural markets are deeply penetrated. So that is the reason why the growth in rural markets may not be significant for FMCG companies. And that, I think I had talked about it earlier also, that even in the US, the top 5 companies way back in the 70s were all FMCG companies. And in the next 20 years, the baton moved to retailing companies because the pricing power moves from FMCG companies to retailing companies. And that's what will happen in India also. So even if I want to have a rural play, I will look at those companies which probably are focusing on rural. They have got their cost under control and they've got their business model right. So between the two, my preference is towards retail, playing the same markets.
Got it. One final question, Milind.
Yeah.
And that is because you cited Zomato, right? I was looking at the results of a bunch of platform companies. PB Fintech, a much better performance. Zomato doing that. A couple of others have done that. Save for Paytm, which has gotten caught in the eye of many storms. So that's leave that out. Are Indian platform companies coming of age? Are you more enthused about investing in them now than what you might have been 2-3 years ago when they started off?
So that's correct. As I said, that I prefer to invest in companies once they are very close to generating cash profits. So I am keeping a watch on them, though we have invested in one or two fintechs of late, because we think that some of them have got their platform right, they have got their credit appraisals right, because especially in fintechs, what is crucial is the credit appraisal. And because they are mostly catering to SMEs and small borrowers. So if they have their credit appraisals right, and they have their overall capital base well placed, then fintechs also could be interesting. But in the other sectors, fintechs could be interesting, provided they have reached closer to cash profitability.
Noted. Point well taken. Milind Karmarkar, such a pleasure talking to you. Thank you so much for taking the time out and
Thank
giving
you.
with us. And
Thank you.
I'll read that book, though I think you told me the last time too. So I'll make it a point to read that book. Thank you so much.
Thank you. Bye-bye.
All right, that's Milind Karmarkar. Ace in consumption, amongst other things, still comfortable buying into some of those expensive consumption names. He believes the profit growth will make up for the high valuations out there. Still has about 20 to 20% of his portfolio towards the capex oriented themes. Speaking of capex, I think one sector that is doing it in abundance is power. And Tata Power numbers were much better than estimates. We get in Mr. Praveer Sinha on the other side of the break to talk about the numbers, capex, and more. Stay tuned.